Hello everyone. My name is Anuj Agrawal. As you all aware that the market is I'll not say crashing, but it's going or gradually it's coming down and down and down, and everybody, like for retail investors, they are a little bit scared about it, and they actually don't know where or how long it will sustain as a declining thing, and they are little bit curious to know whether they should continue their SIPs. SIPs stands for systematic investment plans, where you put it down the defined amount in the monthly, weekly, daily, whatever your terms of arrangements are. So a lot of retail investors are confused whether they should continue their SIPs as per considering the fact of the market, since the market is tanking, or it's coming down gradually, or I mean, they are very uncertain where it's all heading about. So friends, first and foremost, you should understand the how this all, the logic of this SIPs, and how the mutual fund actually works. So friends, like for example, if you are taking any SIP of any of the mutual fund, and as you would, or I assume that you should be aware, if you are an investor in mutual fund, that how it works, like whenever you are putting your money, or you are giving a small piece of money to particular investment manager in the mutual fund, so they will be putting that money in particular the defined set of objectives, and you will be getting the proportionate ownership of that particular, whether it's a share, bond, or whatever the asset class. So friends, how it works, like like for example, if the one stock is 300 rupees, and when you invested in that particular mutual fund, so based on their category or based on their size of the investment, they will buy some units of 300 rupees of shares, and later on, based on some fact, the prices were coming down. So there are two things. If at all there was no fundamental no change has happened in that particular script, so they will or probably they will be keep buying it to make it average for particular the shares or the unit, whatever he would have bought it earlier, to make it that cost of price, purchase price, to to reduce it further. That is what the averages talks about, and you know that, like 300 will become to 270, then you will add more, then it will become 250, then you will add more, like that, and then you will gradually your cost of purchase will come down to from 300 to some whatever is through 220, 30, whatever levels. This is one scenario. Another scenario could be like there is some fundamental changes happened. So if at all that script is lesser than 300, so that maybe investment manager would not go and buy, and he will prefer to sell it off, because maybe he would be estimating that it will take another 3 years to reach that particular amount. So by the time, your time value of money kind of factor, so maybe he will probably end up selling it in the loss, and that's how it will be putting it on that particular portfolio. The another could be, friends, like as you would be aware that recently the SEBI wanted the specific objective of that particular fund. So there were a lot of realignment was happening. So even if there was a proper investment was done by the mutual fund investor, but because of this realignment by the regulator, they had to select some of the the scripts which were very good in that particular averaging, and there were some other script to be bought as per the requirement of realignment of particular minimum requirement for to invest in particular class of the mid cap or small cap. So that is another scenario. The fourth one could be like for it in case of the sentiments per se. Like for example, recently you would be aware that there was a rumors around that for Supertech, which is one of the builder, they are starting defaulting in their debt repayment kind of thing. So I mean, the originality or kind of the the severity of that particular default, without knowing that, the emotional the thing, or the rumor, or kind of the the sentimental effect start ripping in. So that's another case where the stock market starts to falling it, and some of the mutual funds also to take care of that, because they have to take care of their particular the portfolio amount. And another thing to be watch out for, the mutual funds are allowed to invest in the derivative market in terms of they can invest it, they cannot write the option. So like for example, if there is some downside risk, they can buy the option derivative, and that's how they can protect the downside. So those who are not aware about the derivatives and options and all, so we will be taking care of that in the another video, so we'll not be taking. So I mean, what I am trying to tell is, like, they have the safeguard, or they have the tool to protect their portfolio, whatever they are managing in the downside risk. So friends, SIP is something which is not for the falling and upcoming the market, how the market behave. There are a number of factors which makes the portfolio returns the profitable, or whatever the benchmark. Another could be the expense coverage ratio, whatever the expenses they are allocating, and it will be depending on, there is some limits prescribed by the regulator, but it depending on particular schemes to scheme. So some of the times they will be allocating the expenses towards these profits and all, and many of the time they are selling it off and getting the money as a dividend, and they will be distributing it to you. So what I'm trying to tell, by doing that, to stopping that sip, and starting doing the sip in the down, when the market is down, it will not make any sense, because it's not something which is every time you are giving the money, then investment manager is just going and simply buying the security or whatever the allocation. So some of the times they will be keeping it, that cash on the aside, and waiting for the right time to enter into the market. So for me, as far as I know, and my the understanding says that you should not stop the SIP what you are following it, but if at all you have to consider it or reconsider it, that particular unit or the scheme, because you have to understand that where exactly they will be investing it, what kind of the stocks they will be investing it, and what kind of their objectives, if there is any realignment of their particular stock. So there you have to keep it watch on that. So if at all it is not happening as per your requirement, you change it, you switch it over, irrespective of the market condition. So just because the market is down, and just because the market is crashing, or whatever is downside, you should stop your SIP. I don't really think so this is the right thing, because you will end up losing your money also. And at the time when the see, why we go for the mutual fund instead of doing the from our side directly investing, because we are relying, or we are hiring our one specialized person to do the investing on our behalf. So we should keep a rely on that, and we should stay hold on that, and we should not be we should not run away with the fear factor for kind of the turmoil, or whatever the short term runs, short term bearish trends are happening. So this is my just piece of advice, because a lot of people were confused about it. But yes, you should keep checking it, where what are the which schemes you have invested, and whether it's happening, or it is performing it as per your requirement, and also they are investing in whatever your objectives are, and whether they are up to the mark as per your requirement. So if at all it's not happening, you just change it and realign it your things. So that is it, friends, and soon we'll be coming with the more this kind of knowledge sharing sessions or knowledge sharing videos. Feel free to share your comments, and thank you very much.